Welcome to Biztech Asia's Investor Conversation Show. I'm Jeffrey Halley, and today we have Vlad Ayukaev, the Chief Executive of Fintech Venture Group, PVG, here in Jakarta and Indonesia. PVG is a company that seeks to advance reliable and affordable financial technology for micro and small, medium enterprises across Indonesia. It's a very important part of Indonesia because Indonesia itself has over 64 million MSMEs. This is not the only hat that Vlad wears, of course. He's also the head or a partner in Multi-Sig Ventures, a startup builder whose mission is to research, develop, and also invest in high-growth early-stage companies, thus far predominantly in Southeast Asia and Europe so far. For PVG in 2022, they continued growing very strongly. They had monthly sales of over $2 million, 3 times more revenue than the year before, and they continuously tested new ideas. They have over 120,000 small businesses as their clients and have spent up to 2023 over $4 million in research and development. With strong connections to banks, global fintech companies, and European venture firms, they have been attempting to help Indonesian businesses, particularly SMEs, micro, small SMEs, go digital because a very large proportion of that sector is not digitalized. So welcome, Vlad, to the show.
Nice to meet you, Jeffrey, and thank you for this warm and welcome introduction. Yeah.
Well, actually, enough of me talking then, Vlad. Perhaps you could start off by giving us an overview of PVG itself and the entrepreneurial journey that actually brought you from Europe to Jakarta.
Okay, cool. So, I mean, the story is not as straightforward as some people might think. So essentially, since I graduated from college, like I enjoy saying, I've never had a real job. So I was a computer scientist back in university in the States, and then I decided to come back to Eastern Europe, and essentially I joined a startup from day one. So that was maybe around 2014 or 2015. And since then, I was working nonstop in the venture community in different countries, but mostly focusing on marketplaces, transactional businesses, and fintech, of course. And at some point, I think I got a bit tired of being a founder or co-founder myself. So I was in a couple of ventures, and not all of them worked fine, you know, and I crashed a couple of times. So, and maybe I started thinking, oh, Vlad, you shouldn't be a founder yourself. So, and maybe you should study a bit. And one of the ideas that popped up is that, you know, if I want to become a master, I should try teaching other people and start talking about my entrepreneurial experience of failing and working early stages. So at that point, me and one of my partners, we started to, you know, making maybe like a sometimes called, you know, Vigo accelerator, when a couple people just get together and they help other entrepreneurs on a way. So, and we focused exactly on the domain that aligned with our expertise, that is a marketplace and transactional businesses. So, and at that point, it became like a small, you can say, accelerator. So, consisting of a couple mentors, and I think we totally onboarded around 12 or 13 startups. So that was in 2018. So, and it went quite well. I was thinking maybe I should start raising small funds to help those guys further on. So it was kind of, you know, like a portfolio build up for me, right? So I was working with those, a lot of early stage guys, usually those who cannot get funded themselves, like really newbies in a venture domain, like first-time founders. And at that point, so I met a couple of LPs, limited partners. Those are people who invest in VC funds. And I just caught this interest in Southeast Asia. So like I was trying to raise funds for Eastern European markets, for Russia, Ukraine, Belarus, the Baltic states, and that was my home market, and I was hoping to get established there as a VC manager. But you know, the more I got in, the more I realized that focus is slowly drifting away from European markets, and it's been already quite kind of late in the economic cycle. It was already late 2018, early 2019, and Southeast Asia was rocking hot. And yeah, I just got essentially start offering to limited partners who are usually high net worth individuals interested in investing into VC funds. I started offering them this idea, like how about we explore Southeast Asia, and maybe I'll give it a test ground. So, and I was able to found such partners. So, and moved to Jakarta, and essentially we first we did some M&A there just to get running, and we bought a company. It didn't went well. So, and we realized that it's never a good idea to start in Indonesia with a company buyout. So, and we established our own entity, PVG, and essentially started exploring different fintech hypotheses. So we 100% didn't know where to start, but we knew for sure that we want to explore the MSME fintech. Back then, B2C fintech, like e-money guys, or like people serving maybe like running with neobank ideas, and like a Grab Pay, Go Pay, a Flip, trying to conquer consumer market that's already kind of hot. So we decided to stay aside and to focus on MSME fintech, because that's how we saw this happening in Europe, right? First, you get B2C field warming up, then you see B2B banks, neobanks, and other solutions for enterprises coming up. And once I got into PVG and we started digging, exploring, so I came back to my initial idea of running a small venture fund, and I found another partner who is not interested that much in Indonesia, but who is interested in fintech in Southeast Asia region and in Web3 startups. So at that point, I also made a multisig as a side hustle that fuels my long-term dream of becoming a VC fund manager. So it's a really small fund, but I mean, we've been doing great so far, I think. And PVG is a venture studio. It's a classical venture studio concept. So we have a team in Jakarta that works on a couple portfolio products. So right now we have 4 products, and we are working on the 5th one. And they are all connected to MSME. So we have a PPOB, a bill payment app in our portfolio. We have acquiring app for retail merchants, for warungs, for restaurants. So we're also working on a remittance solution. So essentially, yeah, it's a lineup of products, and all of them are connected to B2B Indonesian fintech ecosystem. So hopefully that was not too long.
Very, very interesting. No, it's much better than listening to my dulcet Kiwi tones, I can assure you. Let's just talk about multisig for a moment. So you do have now a small portfolio built up across various sectors with a tech bias. Can you just tell us what your investment selection process is and what criteria you use to identify promising startups?
Yeah, so essentially there are two of us main partners, principal partners, and my expertise are all in fintech, and my partner expertise are all in kind of Web3 blockchain infrastructure. So I mean, our interests collide sometimes, but also, I mean, those sectors, even though they're really connected to each other in a way that both fintech and blockchain support transactional businesses, right, models, but then they require kind of specific expertise. And we focus on those two domains. So as I said, I'm mostly playing for fintech, and my partner is playing for Web3 guys. And that's the first stage of our selection. So we are quite, specific and focused on those two domains. So we do not invest into things that are outside of blockchain or classy regulated fintech transactional businesses. So, but blockchain and fintech, even though they might sound like just two verticals, but they're actually huge, right? It's hundreds of startups popping up in those domains, even if the crypto winter and kind of slowed down of the classy VC. There are hundreds of projects every month that popping out in those two domains. So, and they can be very different. Like, for example, blockchain infrastructure can be for payments, right? It can be for marketplaces. It even can be for games. Some games have been running on a blockchain infrastructure. And same for fintech. Those can be credit institutions like P2P companies, can be payment gateways, can be neobanks. So it can be some B2B fintech, just transactional infrastructure, for example, payment orchestration. So yeah, essentially,
smart
even though we are trying to stay focused on those two verticals, but they're so broad that we have a lot of fun just focusing on them. So, and we never get a lack of incoming projects. So
well, it's very interesting because most people emotionally associate blockchain with cryptos, but actually blockchain underpins the technology that drives cryptos. But as you said, it has applications across an almost infinite set of verticals.
Yeah. And it's actively merging right now with classy regulated financial institutions, and it's becoming regulated itself. So yeah, this is the first step of our selection. So the startup, the founder should be focused within our domains. Then, of course, because it's super early stage, we usually focus on teams that just started months or maybe 6 to 9 months ago. So usually would like to be the first or second check. So if that team already raised, let's say, past like 1 or 2 million USD, it's already kind of out of our scope. So we try to be the first check, and we aiming at the checks of like 100 to 300 and maybe 400 max per investment, and that's the second filter, right? So
pre-series A, but post-seed.
Yeah. So, and essentially, if you are in fintech and you're looking for that check, that's where we really start talking to you and understanding what you're doing. And to be honest, like there are a bunch of different filters that can take part in this selecting of an investment idea. But at that early stage, a lot really depends on the founder himself. Like, what's his background, what his idea, and like how well can he execute even the first steps, right? And essentially we try to find some, maybe I wouldn't say outliers, but we try to find some flags that can argue that this founder would be more successful than the others. And it is super complicated in early stages because you like people who come for the first check, usually they don't have any metrics, right? So they don't have any data rooms. All they have is the pitch deck, and sometimes they have other people already joining the team. So, but yeah, the track record and how you can explain your idea, how you can explain your business model, how well you can argue that this business model is going to be making cash. That's what we look at, and how well you can sell this idea, because founders are all about selling. You should be selling investment thesis to your VC partners. You should be selling your strategy to your team, to your co-founders, right? And you should be selling products to the audience in the internet. So we're looking at how well can the founder sell himself and his idea. So this is, I think, would account for like 80 to 90% of the decision. Of course, there are other stuff, is like how well are your documents, where are you located. So do you have any other VCs on board already? Because VC is all about access game, and usually if one of like better positioned companies join, or a well-known brand joins, then the others like to just tag along. It's simple, people essentially, VC managers, they try to cut possible risks, and one of the biggest risks is to get out of money. And if you can somehow sell your startup to a well-known VC brand, then other investors believe that you will never ever run out of money. So at least this risk is kind of crossed out. So, and technology and idea, you'll work it out. So of course, this also plays a huge weight, whether you can attract other guys. We don't like to be the only check, and I don't even think we ever made an investment where we are the only check, because we are both young and first-time fund managers. So also enjoy to be tag along. I wouldn't.
In nature, running with the herd is a safety measure, and I don't think necessarily VCs are immune from that. So nothing to be ashamed of there. Hey, let's look at the current state of Southeast Asia's tech ecosystem. What do you see the opportunities in the Southeast Asia ecosystem, not just for investors, but for startups themselves as well?
Well, my opinion is changing. Right now, I'm leaning towards more and more taking Southeast Asia as a bit overheated domain, overheated geography. So because of how fast it grew in the last couple of years, essentially, the current the cycle that just ended. So it was ignited by marketplaces and first e-wallet companies in 2014, 2015, I think, right? And it's been already like 8 to 9 years of growth for Southeast Asian fintech. And I think that from this perspective, it really got overheated. So the valuations were quite high. And now you look at the latest deals, like the GoTo deal, for example, with TikTok, right? You see that even the biggest companies on the market, even the unicorns, are making huge discounts on their valuations comparing to what it used to be. So I would say that maybe averaging the market, that would be around 70 to 80% discounts to COVID era valuations. But it is not unique to other VC markets, right? So the same situation is in Europe and MENA in North America, but the difference is that Southeast Asia is an emerging market. So, and when the slowdown or winter or whatever crisis you call it comes, then of course VCs who are mainly located in developed markets, they cut money for the emerging markets in their first first shoot. So that's number one target for savings. That makes us in a bit, I think, harder position than the rest of the VC markets. So, but opportunity-wise, if we look at the market, so Southeast Asia is still where it was a year or two ago. Opportunities are there; they're not gone. So Indonesia, the Philippines, Vietnam, Thailand, Malaysia, they're still like the growth factories of the. I would even say the world economy. I don't see we have any other region in the world that can surpass maybe some African countries, but there is no other region that can surpass Southeast Asia in economic growth and in
demographics,
market shares that are still there. Yeah, so you can come here if you have good product, if you know how to deal with the local regulators, and if you know how to position yourself with the partners here, then you can take this market share. So it's still there. Valuation wise, yes, it is not going to be as hot as it used to be, and you'll have to make great deals for VCs or private equity to get it back in your pocket. So that's how I see this.
Yeah, I think it comes down to the end of the 0% central bank money era, and interest rates rising, and that changes the internal rates of return equations, cost of capital, etc. And now perhaps VCs and private equity are turning more to traditional business principles, where they want to see a path of growth, not only just growth though at any cost. They want to see a path of profitable growth, and that disappeared.
And actually, as an investor, one thing that I really like about Southeast Asia, and I want to see in upcoming years or hopefully even quarters, are exits. Because we're talking about developed markets, Europe, US. There have been a lot of exits, and we know that we know how much this costs. We know how much this project will be able to get if founders and partners want to exit. For Southeast Asia, I think right now is like the first exit cycle. So, and of course, we've seen some unicorns getting public. I mean, that would be maybe some people argue whether it was really successful or not, but still it's there. So going public means this. I mean, you at least got some money back. So that's a success in our business. So, but for smaller companies who didn't make it to the public market, it's still a question whether they will be able to attract strategic partners and sell their equity and ultimately paying back to their VC firms that were supporting them along the cycle. So that's the number one question right now. Will we be able to see even heavily discounted exits in 2024 and early 2025 for Southeast Asian tier 2 and tier 3 startups or no? If we don't see any, and that will be a complete wipe out of VC money, then we will get back into 2015 essentially, or maybe even in 2008, 2009. So
back to the
that's
future.
Still an open question.
I'm actually thinking maybe we may see a lot more private sales rather than IPOs. So a larger company coming and buying some of those, as opposed to the exits that people have got used to hearing about with SPACs or IPOs.
Yeah, and when I talk about M&A, of course, and I talk about exits, of course, I mean both. Getting acquired by a bigger company, by a competitor, that's also fine. For VCs, I mean, it's still a dollar in their pocket, and of course, going public, I don't really, frankly saying, I won't see any public IPOs coming within the next quarters because the window is kind of closed and everyone understands this. But bigger companies should start acquiring their less lucky competitors.
Yeah. This staying on multi-sig ventures for a moment then, when you do invest in a portfolio company, obviously you're handing over a check, but what else are you doing in the background there to support these startups that you're investing in?
Well, since we are super early stage and both me and my partner are spent most of our career in first days of startups. I mean, we essentially try to add or like to call ourselves as a VC founder in the company or VC co-founder. So we try to, if it's a solopreneur, for example, that's super handy because we have bi-weekly or monthly meetings with our portfolio companies, boards, where we discuss their strategy, their performance, what they're doing. Because we know that early days, it's really important to make sure you get into this cycle and routine of delivering product, delivering expectations. So and we work on different streams. We work on marketing, we work on product together. So not like a bigger classy venture capitalist. So we are trying to double the amount of money that we invested with our own work as entrepreneurs and tech guys that have been in the market for a decade. So that's the main goal. And yeah, it usually I mean, it comes down from different challenges. So we help a lot with the structure, with the legal work, because we have legal partners and lawyers that we can trust in different regions in Europe and in Asia. And of course, when we're talking about fintechs and we're talking about blockchain, that's super handy because a lot of regulations right now popping in. So we'll help with those kind of contacts, and we share cases from our portfolio, among our portfolio companies, how other companies in this country or in this domain are solving this specific problem. So that type of work. Well, and of course some really basic stuff that everyone knows, but sometimes doesn't follow. So like how to hire people, how to fire people, how to pitch to investors, how to make decks. So those type of really general venture stuff.
I think it's actually very important, having worked with startups myself in various capacities. A lot of founders I've discovered along the way are brilliant with their ideas, but they don't necessarily have some of those nuts and bolts skills that are required to run a business. And learning on the job isn't necessarily it's not necessarily the most efficient way of doing it, because you're usually moving fast. So there's just a time to go through that school of hard knocks in a traditional way that we might have seen back in the day when I was a bit of a younger man. Look, let's turn back to let's call it your mainstream venture, shall we? If we can describe it at that, Pintar Venture Group. So you're building products that are financially enabling MSMEs, mostly in Indonesia at the moment. Now that space is evolving very rapidly. We've got AI, we've got the metaverse, we've got Web3 or Web 4.0. I can't keep up with which it is now. So how are you going to adapt Pintar Venture Group to that evolving landscape? And also, I'd be interested to know how you feel that your company can contribute to a more inclusive financial landscape for Indonesia in the future.
Cool. So, well, let's talk about the financial inclusion first. Let's go from less advanced stuff to more advanced stuff, right? So essentially, Indonesia has a lot of underbanked or underserved or population that is not using any sort of digital fintech or infrastructure, or are not part of any bank, for example. The numbers here differ from one source to another, but on average, people in our domain say that 30 to 40% of Indonesians, which is roughly 120 millions of people, are underserved and don't have ready access to financial institutions. So that's what we're dealing with, right? And essentially, those people lack access to credits, to finance. This is extremely bad in MSME, right? So it's actually easier to get money as a private person, as a physical entity, than as a corporate entity, right? So it is really, really a big challenge, and this undermines Indonesia's its competitive advantages over neighboring countries like Malaysia or the Philippines, right? So then, of course, it's a lack of data. So people underbanked. They don't use financial services. They're not included into financial ecosystem, and other players of this financial ecosystem know nothing about them. Like they don't know what's their name, how much money they make, how much money they spend. So they cannot make any qualified decisions about their credit worthiness and so on. So essentially, it's like the problem is becoming bigger the more you dig into it, right? If you're not using any bank, then you're actually out of a lot of different services. So you cannot buy an apartment, you cannot get a lease. So this here in this domain, what PVG is focusing on, we are focusing on really simple solutions like, for example, acquiring. We have a POS device. POS is a point of sale. It's a small box that sometimes it's a tap or a phone, so that plays as an online cashier. So you usually see them in restaurants like Starbucks or McDonald's. So, but there they cost thousands of dollars and provided by SAP. So what we do, we are making it really small in the form factor of just any Android device, essentially. So we put there the most essential features like optimizing your stock control, accepting digital forms of payments. Of course, I'm talking about local forms of payments like e-wallets, QR codes. So, and give that to local varungs or locals, retail and other services on the street just for a couple bucks a month. So, which really, really decreases the amount of monthly pay to entry. Yeah, and then the guys, the owners, usually it's like single guy owned type of business. So we call them super owners or super merchants. So they have a completely different agenda on running their business. So now they don't use their paper with the pen or pencil recording their transaction and sales. And that's what you see in many shops on the street in Jakarta. But actually, you can use a cheap Android device for, I don't know, 700,000 rupiah or used, or you can use your home device. So, and then you can monitor all your transactions. The owner can see shifts of his employees, for example, if he has any. So you can see which products are the most popular. You see your stock. You never enter into this kind of, sorry, we run out of this kasong or sold out type of conversation, right? Which you probably know. So,
I know very
and
well.
yeah, and then more important now, getting back to your question, this data is digitally recorded and can be used by our partners and banks or other financial institutions to value this business. So now they see that this Varunk is not just making cash, which is a gray zone, but he's making some real millions of rupiah of income per day or per week. And maybe we can fund him, give him like 30 millions or 50 millions of financing to allow him to buy more, to renovate, or to open up a second spot on the street. So that's kind of very simple, financial decisions, but which will not be possible without the small intermediary as our POS device. Yes. So same for payment, bill payment app. There, it's called Kliku. So there we give an opportunity for people who don't have any bank account to pay for their bills online. So they don't have to go to offline shop. They don't have to pay a lot of the money to the intermediaries to process their cash. So they can download our app. They can register there. They can maybe top top it up once using their friends or someone, and then they can pay their monthly bills for PLN, electricity company, or water bills, or they can buy tickets. Essentially, we have over 1,000 digital products inside our Kliko app. So, and then we also integrate other companies, other apps, and give them access to those products. So any product now can become a bill payment app. So, sounds like a really simple technology and solutions, which they really are, but because of the scale of underbanked population and the scale of Indonesia, so it can really play a hand. So, and I think overall, if you look at like the benchmarks or metrics of our work, I would say that this is e-money transactions every year annually, and amount of loans provided to MSMEs. So that metric been growing, and I think it's a double-digit growth probably for the last couple of years. So, and a lot of this are done by smaller financial institutions like us. So because we make those digital products accessible and easy to install, easy to use, we see more digital money transactions, and we see more funding because of those money transactions. So
I think it's interesting because I'm based in Jakarta as well, but perhaps for our viewers, Jakarta and Bali are perhaps the two most well-known parts of Indonesia, but to perhaps give you an idea of the scale of what Vlad's talking about here, there's 18,000 islands plus in Indonesia, and to fly from west to east in Indonesia would take you between 6 and 7 hours in a lovely jet plane, and it would probably take something around 5 hours to go from south to north. It's a big place, and so the
further you go outside of Bali and Java, the worse it becomes.
Oh, very much so. We've been east of Bali, and when you go east of Bali, Indonesia becomes a very different place. Time slows down, and you'd be surprised at the level of development or lack thereof as you go further in that direction towards the eastern side. So yeah, it's important work, and as you said, having it accessible cost-wise and also as with simplicity, I think are the key ingredients here.
Yeah, and we see a lot of demand for our products actually outside of the capital region. So mostly in like islands like Sulawesi and Sumatra, or Ambon, for example, which are quite populated but are way away, right, from the Java Bali agglomeration or epicenter.
It is a very big place. Even when we were in Kalimantan, we've been as far as Sumber in the east and Flores and up to Kalimantan, and you realize just what a very large, diverse place Indonesia really is, and how different the levels are of development in different parts of it. Vlad, I think I've taken enough of your time. I really want to thank you for being on the show today.
Thank you, Jeffrey. Thanks for inviting me. We'll be happy to speak to you guys again.
Wonderful. We've been speaking to Vlad Ayukaev, Chief Executive Officer of the Pintar Ventura Group. I'm Jeffrey Halley, and you've been watching and listening to Biztech Asia's Investor Conversation Show. This interview will be on our website, www.biztech.asia, as well as our social media platforms. It will also be with our syndication partner, TV stations, radio stations, and websites. Thanks so much for tuning in.
Thank you. Goodbye.